Hi, and welcome to ESB University. My name is Tim Pauley, Vice President with the Exchange State Bank, and today I'm going to cover some important aspects of the credit report. As most of you know, one of the major items us lenders look into when deciding whether or not to approve a loan request is the applicant's credit history. So what goes into calculating a credit score? Number one, length of history established in the credit report. Legally, you cannot establish a loan or credit card until you're 18 years old. However, you can act as cosigner prior to turning 18 and have your parent or guardian be the person legally responsible for that loan or credit card. If you're under the age of 18, I would highly recommend talking with your parent about taking a loan out to start establishing credit. That way, when you do get out in the real world on your own, you have an established credit score that lenders can use to determine your credit worthiness on paying back the loan you are requesting. Number two, the number of open loans or credit cards outstanding at one time. The higher the credit score, the better off you are. That's pretty obvious. To obtain a high credit score, you should not have more than 2 credit cards open at one time. Simultaneously, you should also not have more than 1 installment loan, such as an auto loan, open at one time. Number 3, the amount of debt outstanding versus the amount of credit available. Let me give you an example. Say you apply for a credit card and the company approves you for a $5,000 credit limit. That means you can borrow up to $5,000. Here's the issue. It's very easy for a person like you or me to put an unexpected expense on the credit card and deal with it later. Unfortunately, you do that a couple of times and you all of a sudden have a higher credit card balance than you planned on and no money in your deposit accounts to pay off the credit card. If that balance exceeds 30% of the available credit, or in this case $1,500, your credit score can be negatively affected. The higher the percentage of money borrowed against a credit limit, the more likely it is you'll experience a negative impact in your credit. Watch how much debt you have outstanding versus how much you have available. And number 4, derogatories. Derogatories are negative items that show up in your credit reports, like collections, judgments, bankruptcies, or foreclosures. And it's pretty simple here. You pay your bills on time, as agreed. You should have no issue with the aforementioned derogatories. I get it. Financial hardships are sometimes out of your control. But if you do have financial trouble, do yourself a favor and communicate openly with your creditors. Do not hide from it. They want to work with you, and by doing so, you can avoid the negative hits on your credit report. There's so much more I could tell you about credit reports, but that's better handled face-to-face. If you have any questions about credit reporting or personal credit, call me, 815-493-2631. Also visit annualcreditreport.com to confirm nobody's tampering with your credit. Exchange State Bank is a member FDIC and equal housing lender. Have a great day.